Hey traders, what's happening? Jamie Setley here, Midweek Strategy Webinar, SB Trade Desk. It is October 18th, 2018. It's Chris and Mark, a few others, a couple more coming in. Let me know that you can hear me and that you can see the chart or the screen. And we will get started here in just a minute. All good, says Mark. Okay, great. Got a lot to cover today. In terms of what's going on with equity stuff, of course. Here comes Ty. I see Ty. What's up, Ty? All right. I'm going to start. I think what I want to do first is kind of just run through some FX stuff, which frankly, right, FX has kind of been dead compared to what's happening, you know, in the equity markets and what's happening in some commodities, right? So that will change, it always does. But let me run through some of the levels and whatnot first that we're looking at, that I'm looking at in the FX, and then we will dive into what I think is the real important stuff right now. Okay. First, while I have here, so I'm following the NASDAQ really closely. This is the NASDAQ futures. We channeled up from the low last Thursday. And you see we just broke that this morning. If you do get a little more of a bounce, I think we're actually headed for a retest of the lows, and then we'll see, and you'll see why I'm talking about that later. But this NASDAQ futures chart, if we do come up and at some point over the next day or whatever, this underside of this trend line should be resistance now, in my opinion. So just something to keep in mind. US dollar, okay. It's been a dreadful, choppy mess. Look, we're still, when I look at it from like a longer term chart, right, the weekly chart, I mean, we're on this fork, you know, you get the idea. Still, we've been chopping sideways for what seems like forever. But near term, watch this. You do have what could be kind of construed as a 5 down. It's not all that clean, frankly, but the subdivisions aren't, at least, but it's not terrible. And I would be looking at the 618 of that, which is basically your upper parallel, and that's 12,227 or so. So it's a little higher, not much higher, and you'll want to see resistance there, in my opinion, before thinking, downside, decent downside. And I think that fits with what we talked about with Euro, right? You can see Euro here. So this was the Euro chart I'd put up last night, is this one, right? That 114.50s area to me is pretty big. Again, it's the square root level. It's the 5th square root down from the year open. And if you remember, we topped on the 5th square root up from the year open on February 16th, okay? So it is a big spot. Want to see support there. It's quite the waiting game right now. The other way I said that we would have evidence to be long or get long was if we had a move up through 1532, right, which is the high volume level. And this morning's, quick spike kind of stopped at that level, or 5 pips shy of it. So obviously that would keep us on the sidelines right there. In terms of, want to see support there, okay? So if we get support there, preferably today, maybe tomorrow for a Friday low, and you get some evidence of a reversal, call it an hourly reversal at this point, then I would be looking to the upside and just be looking to position long. And frankly, I think if we did turn up, we'd turn up pretty hard, and I wouldn't be too concerned about a target initially. British pound, I mean, we're getting real close here, folks. 30.50 is the level, and that's where I'm looking for support. Okay, I know this is, a lot of Brexit stuff going on, all the rumors back and forth. Don't really know what's going to come out of May or anyone else's mouth next. Ty asking for a chart, the bigger picture chart. Yes, 1 sec. Let me finish with cable here real fast. So yeah, not too, I don't know, in a hurry in this environment with cable, but this is a good level. I mean, the 30/50s, and just look across the chart, right? You've got good horizontal levels or responses at that level anyway. Maybe you try to brush out these lows at 30.28. Either way, be on the lookout for, formation of a low support, attempted low, frankly, really soon. I mean, we're kind of there. I thought maybe we try to come up here, last night and then come down, make it a little more complicated. That's why I had the short order. That's obviously going to go away at this point. But big spot right here for British pound. And, if this breaks, then we're probably looking at more of a bigger drop, maybe a bigger correction, even back below 29.15. My head's not there right now, but if we were to drop down here, okay, then we'd probably be looking to sell on this line at some point later on. And Ty wanted a picture of euro. Yep, here you go, sir. Is something like that okay? You let me know when you're finished. Okay. Also, I want to important to note here, the reason I had to change the webinar till today, so I trade for a hedge fund as well, and they'd asked me to do this presentation at the last minute yesterday, so I had to do it at the same time I usually do our thing, so that's why I had to change it. So apologies for that. I know it was late notice, but didn't really have much of an opportunity to give any advance warning because I didn't have any advance warning. All right, so there is British pound, euro, dollar yen. So this morning I moved that entry to lower, partly because the way we were dropping did not seem to fit with how we would, come up out of here. And sure enough, we are starting to sell off pretty good here. So selling off right here, and we are looking at, I guess you could, if you really wanted to be a stickler, you could try to get like 112.15, which is the lower parallel down here. I'm looking at simply putting it on the week open here. It's a tight stop, right? 112.25, stopping out down here at 11.95, and just with the idea that, we have come off of a really, really, really big spot. I mean, here's the 4-hour chart. I do think, and I've said this in the writings, that the eventual risk is lower and that we do break to the downside. But I am willing to, kind of attempt a low or tight stop. I wouldn't say low risk because I think we are going against the broader trend at this point. I think this is lower, but I wouldn't say that it's a bad idea, right? I think it's a decent trade idea. There's obviously a big difference there. Not trying to predict the future. You can't be worried about being wrong. I think it's a good spot here to attempt it. And maybe we get, one more leg up at some point overnight or tomorrow or whatever, and then we can actually go in for the bigger short position. Obviously, if we come down here and we break this low, puts me in no man's land. We got to break the lower parallel to really say that, shit's starting to hit the fan, right? So either way, we're getting real close here to the entry. So it is what it is, and we will see how this plays out, but I'm okay with it. you could say as well, and these are intraday patterns, of course, so it's a little different. But if we were to break 112, and obviously we'd be stopped out at that point, you would have a failed inverse head and shoulders pattern, which would be a signal in the opposite direction. But again, at that point, you're still contending with the lower parallel down here. Okay. Something I want to point out real quick. Notice how the stock market started to sell off right when I started the webinar, okay, right at the European fix. And it's subtle, but you're seeing the euro actually get a little bit of a bid. Obviously, dollar yen's coming off, right, as you kind of expect during a sharp risk off thing. But even other currencies are getting a little bit of a bid. I mean, Kiwi's holding up, Aussie's holding up, dollar CAD's even come off a little bit and it's flat on the day. That relationship of seeing the dollar actually, weaken a little bit with equities is really important, and you'll see why when we start going through all of these other charts here in just a moment. Okay, but let's move real quick to Kiwi. Don't have a lot to say here. We are still long a piece, right, from the entry back right here. Ended up being a pretty decent entry. And at this point, you're contending with essentially 66.25, 66.30. You can see up here, month open, 66.22. This is your trend line, February, March, all that good stuff. And that would be your next test. Frankly, I'm not all that interested in necessarily getting out here. I think we could be coming out of a much bigger base. So we'll see what happens if we get up here, see what it looks like. And, we'll be at minimum tightening stops, of course, but that's just a level to pay attention to, right? The stop on the rest is trailed down here. So at least we lock in a little more if we do come off. Aussie, kind of like Kiwi was last week, right? So remember last week, Kiwi was trading on the center line, and our idea was to enter on the center line on a retest, and it worked out. Aussie's similar right here in that Aussie's on the center line. It's been trading around it. It's building a lot of energy. This is a facet of median line analysis that is often overlooked, and that is when you trade around the center line for a prolonged period of time, like we're doing here, it's building a lot of energy. Now that's true in any market environment, right? Like where you're consolidating, that's what you're doing. You're building energy. However, when you're building energy around the median line, it gives you a little more confidence in that the way you come out of it is going to be a sharper move. So in this case, and you can see I have this fork drawn here, which obviously is nowhere near being verified or what have you, but it does explain or describe the angle very well on the resistance going up for the last week. Okay, the last week and a day, actually. That's last Wednesday. So with that, if we can get up through here and come back and then find support on it, that would be a way to enter an Aussie long with a tight stop, right? The other option, as I mentioned last night when they had Aussie jobs data, I was looking for maybe if we got a quick dump, look for support down in that 70.85, 70.80s area. Very well defined. You do have a bearish parallel coming down here, but more important to me was the fact that you had that low from September 11, right? So that was a clear level. Saw some congestion around there, but so Aussie's like constructive, but and if it could be a flyer like long here with a stop down here could work. I'm not really there yet. I don't think it's necessarily worth it. We'll stick with Kiwi, for now. Kiwi's actually strengthened against Aussie throughout the day anyway, so I think it's actually a better place to be, okay? We did see, Aussie stronger last night initially, but I think the trade still is with Kiwi. And you can see if we look at, say, Aussie Kiwi, let's see here, hold on. So Aussie Kiwi itself, okay, here we go. This is a weekly chart, just real simple. Aussie Kiwi itself, you do have this kind of topping formation, right? Head and shoulders broke down. We've come back into it, but now you can see coming off weakening after the initial reaction last night on the Aussie jobs data. So to me, still a rather kind of be on the more Kiwi side than the Aussie side at this point. That can obviously change, but I think Kiwi is a better spot to be for now, okay? Okay, what about dollar CAD? What is going on there? Dollar CAD. Choppy mess. As I noted last night, the pattern really has been indecipherable to me, um, you know, of late, really being, not having a whole lot of pattern. The levels, though, are okay, right? Like, I think the thing to pay attention to here really is just this trend line. Fridays, usually you do get some Aussie or some CAD data out. So GDP in China, that'll be big given what's happening there. But yeah, so you get CAD CPI tomorrow. We'll see what that looks like. And two levels to watch. I would actually be willing to trade on the long side if you got down to 29.80. That's a high volume level. It's also that trend line from 2012. A lot of people take issue with the trend line thing from, way back like this because it cuts through so much price. But I mean, frankly, it has been pretty good at times. Like, back here in May, solid support. It would have helped to know that's there. Um, Back here in August, solid support would have helped to know that's there. Now, since then, it's been a big mess. But you know what? It was a big mess too for a while over here, and then it came back into play again. So, don't dismiss it just because you think it doesn't look so great or whatever. The two levels for me are 29.80 and 31.30, and that's really it, right? 31.30, by the way, pretty close to the high back here, 31.24 from March of this year. Okay, so now we've got that out of the way. Ty, will you please cover high volume areas in a future webinar? Sure thing, Ty. You got it. There's it's a very logical thing, right? I'll just go real quick and kind of give you an explanation. So high volume areas, let's just take Euro for example, okay? So I look at the most volume you've had in 120 hours. 120 hours is going to be 5 days in a market that trades 24 hours a day like FX, right? 24 times 5. The idea being that a high volume area means that it's an area that the market has a vested interest in, because if it's a high volume area, what does that mean? It means there's a lot of buying and selling at that price. So presumably, if there's a lot of buying and selling at that price, then there'll be a lot of buying and selling when the market comes back to that price. So a lot of people bought and sold here. Okay, we don't know who the stronger or weaker hands are. We just know that there's a lot of volume. Well, when the market comes back to a level like that, right, like it did here and here, it's supported. The buyers have the upper hand because those that bought here defending their positions, or maybe those that sold, maybe they have to buy and maybe they want to get out, right? That's why this is such a big pivot for me. And it's just a very simple objective level to say, you know what, if we're not above it, then I don't really see a reason in being long and hoping. I might as well wait for the next spot, which is a little lower, right? So that's a quick and dirty on the high volume stuff. But certainly there's a lot more we could get into, and perhaps I can try to do that at some point in the future. All right. Okay, now let's get into the fun stuff. So let's bring in our Excel analog thingies here. Here's the Bork-Kavanaugh. Right now, it's looking like today is going to be a down day. I mean, NASDAQ's down 107 points, and that's what we're comparing this to is the NASDAQ. So I'm not going to go and say that, we're going to end up here today or whatever, because we probably are not going to. However, this in the special report, right? I mean, it kind of lays it out, like says how you had, the nomination of, the nomination of Bork on July, whatever it was, 1st, 2000 or 1987. And then, Bork was July 9th or something, 1987. Incidentally, they both, October 6th was the resolution. Bork was rejected. His nomination didn't even go to a vote. And Bork or Kavanaugh went to a vote and was confirmed. The point isn't that Bork and Kavanaugh, this was just like a tip me off to look at it like this. But what do these lines represent? Right? Yes, we know one's the S&P from the 87 and one is NASDAQ from now. But maybe it's not just that. Maybe it's a barometer of, say, the market's belief in Donald Trump. Okay? Think about it. When Trump was elected, the market went nuts on the upside, and really we've been doing that ever since. Okay? Until recently, until 2018, which has been a back and forth year. A lot of people don't realize it, but when Bork, October 6th, when his rejection, this is what it looked like. This is the 87 chart. That right there is October 6th. That was when he was rejected. That was for Reagan. Reagan lost the market at that point. Do you see what I'm saying? So like he might be losing the market at this point. Trump. That's all I'm saying. This time series, this data is simply a barometer of the market's belief or faith in the president. That's what I'm thinking. That's my belief here, and that's what I'm going with. So, does this predict anything? No, it's descriptive. It's descriptive in the sense that the market might be really losing belief in Donald Trump, and if it can happen really quickly, and yeah, you could get a crash. So it's deeper than Bork and Kavanaugh. It's what it means. Okay, so think about it from that standpoint. Now, does this mean the market's going to crash into the 23rd of October? Hell if I know. I do know that, some out of the money puts are probably not a terrible idea, given all of this. But I want to get to something else. There's another highly distinct possibility. So what we have here is 29 in blue, 87 in red, and in black now. Okay. I keep it in Excel because it's that way we're not manipulating, right? We're not trying to sit there and fit everything back and forth. Okay, hold on. Market's getting heavy on the downside right now. 124 on the NASDAQ. When I was looking at this last night, so we have the 29 and the 87. When we look at, sorry if this is messy, but you have all these charts in the special report, which by the way, I hope that you liked it, the special report. I had a lot to say. When I have something to say, I might as well write about it and send it to you guys. But when we dropped initially in 29, it took like 23 days. It took a lot longer, and then you had a 5-bar move that was about 12% up. The last few days are far more similar, or last few weeks are far more similar to 87, right? 9 bars down, minus 8.68%. 5 bars up, -5%. And eventually you got a test to the low and then another move higher, all the while failing within the channel on a well-defined level in that channel. Remember, S&P, right? 9 bars down, 5 days up. What happened here? Like now in the NASDAQ? 8 bars down, almost 11%. 5 bars up, or 4 bars up, 6%. It's actually right on target with those two things. Now, again, this is just matching up you can say the market goes down, 10% in 8 days or whatever, and up a couple days, a decent amount. By the way, hold on, I know things are moving fast here. Euro yen support right here, just hit it, 128.95. We got triggered on dollar yen, so maybe that'll work out. And I don't know what's going on with euro, but if this is real or not, but I'm seeing spikes galore right here. Must be some news coming out, some sort of headline, who knows, or it's just the European close. Either way, let's get back to the task at hand. So what I've done is, look, everything leading up to this has suggested to us that we could have something terrible happen in the market, right? We're not sitting here and just saying, oh, because we went down 8 days and went up for 4 days, that's 87. No, that's not it, right? All the channeling stuff, everything that we've talked about for a fairly long time, the long-term parallels and resistance and all that stuff, right? This is all leading us to this conclusion. So let's go back then and let's throw up the overlay of 87 with now. It puts you right here. Ty says, I was in front of the screen 87. Man, good for you. He says, we were very similar, 87, Main Street boom. Yep. Yeah, so there's a lot of things going on. So it's not such a crazy pipe dream, right? So here we are. This is the overlay. If we come down and we contest the low and we have some, this is something to continue to follow, and we contest this low, and then we get a big reversal, just follow along, right? So this is where my head's at now. I'm looking near term, as in into early next week or something, for a test of the low in the Qs, in the NASDAQ, probably the market generally, right? But my focus is on the NASDAQ for reasons that have been specified. And then we would be looking at, and this is where the exciting part comes in, around in November, either a 2nd, which is a Friday, or the 5th, which is a Monday, high. Well, guess what? November 6th is the midterm elections, right? What if, I don't know what's going to happen, but I'm just, kind of thinking here out loud. What if you do get, Trump? What if Democrats do come in? What if the Republicans lose a bunch of seats? And this is not meant to be a political discussion whatsoever. But what if that happens? Right? Doesn't that go hand in hand with what we talked about with the Bork-Kavanaugh analog, about the president losing his power, or the perception that he's losing his power, and then he loses the market? Okay, and that's on pace with what we talked about in the midterm analog, right? That's our midterm analog. So that is from 29, the midterm map, and this is from 87, and they both actually would match up at that point. So my interest is piqued, if you will, in a possibility or something like that happening. Okay. So here's the Qs. So what we'd be looking at here would be something like this, if this were to play out, right? We come back down here, and then we go, like this up into the midterms, and then all hell breaks loose and it's all over. Another amazing facet here or observation is this is that fork, which looks all jankety at this point, but it's still valid. Don't worry about it. The fact that we had this takes you down to the median line. Okay, that's exactly where you would expect a crash to go anyway. So yeah, this is one of the most exciting times I can recall in terms of trading in the markets, right? Now let's look back again and let's look at the relationship. This might be the most important thing of all. Let's look at the relationship between let's look at bonds first. Okay, so we're going to compare bonds with the market. So bonds in 87, market, the bonds drop down to a low with stocks in May. They start to go up together, right? Bonds top in August around the stock top. They both start to tank together, right? And finally, the bonds make their final low as the market crashes. Bonds, stocks make lows, market starts to go up with bonds. Bonds make their high very near the stock market high. The bonds start to tank. So does the market. Pretty damn similar, huh? In other words, all the ingredients seem to be there for what's happening. Let's change it to the dollar. Let's look at the dollar. So DXY. You know how usually, or in the QE environment, notably, right? The dollar and stocks tend to move opposite. Let's look back to 87. Starting basically back in that May period, you know, when you started off on your final blowout, or sorry, this is SPX 87. You start on your final blowout, the dollar started to move with the equity market, right? They came down together, dollar rose as we corrected, and then the market crashed, and so did the dollar, except it had a quick flight to safety during the actual crash, but then it continued lower. What about now? The dollar bottomed and started to go up with the market, and we've been moving together. It's the same thing, okay? It's pretty crazy. So that's what I was saying before is you notice as the market started to accelerate to the downside, just now the stock market, what did we see? We just saw, you know, the dollar start to come off as well. So the intermarket relationships are all there as well. So now what we have to do is focus on our, you know, our near-term price levels and everything, right? So for me, I'm looking at downside in this. Again, I'm thinking retest in the Qs in the NASDAQ. Here's the NASDAQ 100. I would keep an eye on this, especially the NASDAQ 100, because we actually never hit the trend line on the NASDAQ 100, or this is the NAS 100, this is the CFD, which is like futures, right? So it's going to be the same. We never got there. Maybe you go there overnight one night and then you get the bounce. In other words, you get the lows in futures, but not in cash. Something to think about, certainly a possibility. Watch that 2776 in the S&P. Maybe you get a bounce there. Ew, dollar yen's looking mighty nasty at this point here. Woo. All right, so that's where we're at with the markets, with the equity markets. So I hope that observation helps. Essentially, all you have to remember at this point is lower from here, looking for a retest of the lows from last week, and then we could have a, as per 87, we could have another reversal, go back to the highs, and then sometime around the midterm elections, we actually start to really actually crash. Okay. All right. What about some other markets we've been following? Crude oil, heads up, we're coming into a level where you could get a bounce or something. Again, you have to look at all these markets differently, independently, right? You don't want to sit here and assume that because of everything we just went through. Obviously, you want to be careful. It's not a time to be swashbuckling and sitting here and buying with oil companies with two hands tied behind your back or anything like that. But pay attention to the 68 area. 200-day average is 67.36. Clearly a big level. 200-day average in crude tends to be a big level. I mean, for whatever reason, it follows it really well. So I would pay very close attention to crude oil down here. Looking at gold, not sure if we're going to end up getting that median line test down here at 12.15. Although this could be an A, this could be a B, and you get one more C. Either way, just follow the channel. Bullish gold, but the pullback didn't get where kind of we were thinking. That's okay. If you break out through the top of this through 1240, then again, you're in an impulsive market, and we're looking at 1266 or something like that, right? That's that high from back in July. What else did we want to look at? Oh, silver. Silver's lagging, as you would expect that to happen in a risk-off environment, right? Gold is the one that's performing and silver's not. So I would be, if you're forming kind of a complex head and shoulders here, maybe we actually want to pay attention to silver before it gets through here. Remember, I've been saying that I don't really care about silver until it gets up through this line, which now is about 1509. And if that, if we don't get that over the next couple of days, and instead we continue sideways or even lower a little bit, I would just look at this trend line off the lows, right? That's it. I would just look at that and see if you can find some support around 1438, 1439. And that could be a good spec play as well, okay? And finally, we cannot forget about the bonds. So the area that we've been looking at, remember, for the bonds, is that long-term channel down here in like the 112-ish area, give or take. However, I would be awfully careful because, look, if we're going into a completely unprecedented, insane crash, well, not unprecedented because it did happen in 87, but unprecedented to most, if we're going into some sort of a scary crash period, look, I don't know, maybe you get all the way down to the trend line, which is all the way down at 102. That sounds crazy, but remember what happened back with S&P back in 87, right? So this is something to watch for the next week plus, is if we get, like, we could be here is what I'm saying, right? You could be here. And then if we start to come off again, bonds go down into a crash period with stocks, then we're not done with bonds on the downside yet. Okay, we'll take it again each, each day at a time, right? Each trade at a time. And other than that, that's what I got. Do you guys have questions or anything? There's a lot going on right now in the market. So, it doesn't have to be about currencies. I don't know why you would have a question about currencies right now. Currencies are freaking dead. Again, that should change. But I think the comparatives with, well, the 87 especially, and the relationship with the stock market and the bond market, and the currency market, especially the currency market for us, for me, my background's in the currency market. So that is, to me, that's really tells me a lot, right? Like if we're hard down for the next couple of days to test the lows, you would expect that the dollar goes down with it, which would be euro bullish, just based on the relationship that we've had, right? Yep. Pooja saying euro yen. Yeah, here you go. This is that spot we talked about, right? This is a big spot. This is 129. I'm a firm believer in seeing some evidence, but yeah, I mean, this is, if we're bottoming, this is it. Over here we were trying to bottom for like 2 weeks, and it wouldn't get there, wouldn't get there, wouldn't get there. How many people do you think got sucked into buying it here and got stopped out? Sucked into buying it here and got stopped out. Well, now we're here. If we're going higher at all, we better hold, because this is no bueno. Again, in the current environment, however, I do think it's better to trade some dollar crosses. That's not sure how much longer I'm going to stick around with this dollar yen trade. Yeah, Thai. Yeah, it is a big outside down bar in dollar yen. Let's see if this holds a little bit or comes back a little bit. If it does, I don't know. We might not want to stick around too long again, given all the stuff we just talked about. Oh, here's another chart. I think I posted this last night on Twitter, but you want to talk about a market that we talk about the US being a market that could crash. Look at this thing. This is the Shanghai composite. We are at, I described on Twitter last night as being sitting on kind of a trap door, like a giant trap door. Hard to argue with the merits of channel and median line analysis when you see something like this. Look at the channel from the 2007 high. Support, median line, February 2016, right, for a bunch of weeks, right? Resistance, like on the 25 line, like perfectly. Here we are now. This is a giant moment in time, okay? The next level, folks, is like probably not until, like real level is probably not until another 18-ish. So we're currently 2486. So, call another 700 points, over 24. You're looking at almost what, 27, 28% on the downside. You might have something there for, an intraday bounce, because you can see the levels here. But that, this is your big spot. Again, symmetry, right? We talk about 25 line, 75 line. So things are lining up to get real dirty and real nasty. Obviously not just in the US, but China is the one that looks like it's the most trouble, frankly. Now, if we go to, say, a shorter term chart, let's go to 60-minute chart. You can even go 240. Draw yourself a shorter term channel. Right? You might be in for a little bit of a bounce here. I don't, I'll watch this chart closely. If we do, we'd be looking at resistance somewhere around here, 25.50 or even 26.40. A lot can happen in terms of, quick spikes, right? Bear market rallies, as we know, are always the most vicious ones, they say. Whoa, 170. Things are getting real dirty here with intraday volatility. And we're not even holding on the S&P. Look at that. So, yeah, the call for a test to the low and then, then reassess and pay attention is looking quite prescient at this point in time. All right. Anything else? I don't have much else to get to. I thought the most important thing today was getting through and sharing the the relationship with 87, right? And what that means going forward for the next week, maybe more. Okay. Concentrate one trade at a time, right? We're lower from here, retest to the lows by early next week. Don't expect it to be in a straight line. At least I don't think it'll be in a straight line. And I think we'll probably have some back and forth volatility, but that's where my head's at. All right. If there's no more questions, I'm going to wrap it up here, folks. Going once, going twice. And all right, Dunsky. All right, so I hope you enjoyed it. We're at a critical time here in the financial markets. We've got things kind of laid out so we don't have to be nervous or worried or whatever. We kind of know what to look for, which is being prepared, and that's the best. That's the best thing to be, right? When everyone else is losing their heads and freaking out, we're there to pick up the pieces. So, all right, have a great rest of your week. What's left of it, only a day and a half, and a good weekend. And talk to you guys later. All right.